The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. Dow's up 63 at 13,846. S&P's up only $1.21 at 1488. You've got the comp index down about, just down a tad at 3116. Now this is going to be interesting because gold futures are up 19 at 1606. Silver is up 16 cents. Copper is up just a tad, it's at 3.5, and bonds are up 20. Whoa, bonds are up. Is that correct? Up 24. Yep, the TLT is in fact up 2 cents. Let me just double check that. Maybe let me just go there for a second. USU 13. Yeah, 25.36. Oh, what an interesting session. So we've got Bernanke talking. Now, let me just get this done right away. First of all, thanks, Steve, for 2 great hours. And then, of course, today, options hour we've got coming up after this. We've got Daryl. I'm not sure if Daryl's going to be around. Anyway, we've got Daryl Martin at after the options hour. We've got Dave White. You got Ken Shreve. And then you got the Tom O'Brien show, except Tom is out and he's going to be on his way to San Mateo in California. And he's going to be doing a show with Daryl Martin on the Dynamic Trading Strategies Workshop. I'll be sitting in this afternoon for Tom. It's a great pleasure to be able to do that. But you got to register now if you want to reserve a seat. This event is bound to be sold out. I mean, the details are on the front page of TFNN. Why are we talking about these different things? Let me just put this up so you can see it right here. I've got a Master Trader Series with Basil Chapman. Come join Basil Chapman for this all-day class taking place at Babson Executive Conference Center in Wellesley, Mass. This is going to be Saturday, the 9th of March, all day. This is for those who have done my Level 1 or you've done my webinars. You need to have done something, and you certainly need to have studied my CD introducing the Chapman Wave methodology, or you've been using the Chapman Wave methodology. I keep getting emails from people. I'm going to go through one in a few minutes. And it's this. What's so fabulous about this particular one, the Level 2, well, like I did in October, is that in this particular workshop, Master Trader Series. I call the Master Trader Series only because you're trying to master and develop the technique of the Chapman Wave. It doesn't make you a master. You can't be a master in 8 hours or something like that. You need experience. But it gives you those tools. What I'm going to spend a lot of time on is the chart patterns. So if you're not just 100% comfortable with the notation, some of the aspects, that's okay. But if you're just comfortable enough, you've started trading, started to make money using the Chapman Wave methodology, this is just going to be a fabulous, fabulous time to be able to do a course like this, because I'm going to be showing chart patterns. We're in a consolidation phase right now. That what this is going to show you is how the patterns through this coming period should be working. Talking about patterns, let me show you something. In the Dow pattern that I was talking about, what I have here is Dow. The pattern in the Dow had that oval pattern. It snuck above the high of the oval, 14,044 to the 14,081 area, to make the neck and the head all in one, and then it created what I call the beak. And the beak is what takes you to or below the trough of the oval. In other words, it went below 13,834, and that was important. It went there a couple of days ago. That was the level a couple of days ago. Today, the low was 13,784.17, and that is probably 0.16 above yesterday's low. So in a sense, that's good. But look at the different techniques that I love to teach. Look at that 9-period exponential moving hour average. Look how it was support. What you can see here is just part of the huge amount of work I do for my subscribers every single day. And almost all of it is original work. Original in the sense that it's using the Chapman Wave methodology. Within that methodology, it's an umbrella for the concept of higher highs get graded and lower lows get graded. So many things going on. Let me just review once again. Tom O'Brien meeting with Daryl Martin on Saturday, March the 16th, noon in San Mateo. Oh, that can't be this Saturday. Oh, obviously, I did that. That wasn't correct. March the 16th, San Mateo. Okay, well, Tom is out today. I thought he was on his way. Couldn't be on his way. It's not going to take 2 weeks to get there. So Tom is out today, and but you've got to sign up for that particular webinar, live, because not a live webinar, this workshop, because it's really important that if you want to be there, you go to the front page of TFNN, check it out. Details are all there, tfnn.com. Now, well, let's get back to a story. Of course, after my show, you've got Victor Jones, Options Hour, fabulous program. This is very important, what I'm looking at right now. You see the way that the 9-period exponential moving average had been support ever since it broke out on the 2nd of January to the 13,400 level. It never closed below that 9 EMA. Now, what I've found so important about different moving averages is that in the work that you do, if you're able to ascribe a certain look-back period through your experience that works best with your methodology. That's why I never tell people, oh, never use this simple moving average or any other kind of, or any number. I have found just in my work, for the way I look at stocks, pertinent to the Chapman Wave methodology, that is the exponential moving average that I have the best success with. I love it. Now, do I use the 9 EMA together with the 9 SMA? Absolutely. There are times when I use it because I want to see where the crossover is, what it's doing. Very important. The EMA puts the greatest amount of weight on the last closing price, and the simple moving average just smooths everything out. So look at the MACD in this particular chart. See the MACD, the moving average convergence divergence? Look how wide it is. It's not showing any sign yet of flattening out. The stochastic is. It's showing a little bit, but it's at 27%. Now, I have a whole bunch of techniques, proprietary techniques. I call them proprietary in the sense that I talk about them all the time, but I made them up. Now, one of the things that I've done is I hardly ever take from others to use for myself. It's usually something that I've developed, or I might use something that was developed by somebody else and then give a completely different resolution to their particular methodology. And that's what I do with the Richard Arms TRIN index, short-term trading index. And what I've done is I've got certain numbers that I look for, and if they are met, then certain actions are going to take place. Well, if you're looking at the TRIN index at 1.25 today, it's down 1.51. Yesterday it had a very high reading, and to me, that high reading said that within 1 to 2 days there should be a sharp move to the upside. I always call it a counter-trend move, because it's rare to make a new high like it did on Friday when it gave the signal on Wednesday. And it's within 1 to 2 days. This particular index, the way I work it, is within 1 to 2 days. Another way of reading the index says it has to happen first thing or very early the next day. So I have different ways, different gauges. I call it the Chapman Wave TRIN gauge. And that succeeded again in giving this reading, because the S&P future certainly had a really sharp move from the low yesterday to the high today. And the Dow, in fact, was up at one point today over 80 points. So That's what I'm looking at. Now I'm going to go into some other kind of details, and this is what I like to look at. Look how simple this particular chart is. There are no moving averages, couple of lines. I didn't even have to have the lines. I just have the lines because I want to make it a little easier for subscribers to see. I do this every day. It's called, I wonder if I can find it here. Let me move this over. I'll make it a little bit smaller. This is what I do. This is what I do for subscribers. It's one of the many charts. Look, this is what I discussed. I discussed this particular chart, and this shows, I call them the 5 quadrants, just like the Click and Clack always talk about the third half hour, the third half of their 1 hour show. So this is the 5 quintlets, 5 different sectors. Here I have the 120-minute chart, which had this rogue wave spike up to a peak B with an Eiffel Tower pattern. That Eiffel Tower is where you go straight up and straight down. And there's this, what I call the flat base restart right there. That was very important because that was the support. We took it out yesterday. This is the incredible move on the volatility index. Another reason why it was important to look for at least an attempt to rebound today. Now, I'm suspecting that although we're going down, a big chunk of the 400-point move down, based on the incredible spike up in the volatility index, is telling me that we might be looking more at time than at price. That's my suspicion. I don't know. Number one. Number two is, in this second one of the 5 sectors, this is the volatility index 120-minute chart. You can see that the gap between 6.93 and 17.88 was just spiked right through. 23.23 was the high that was made in December on the volatility index. It just plummeted down to $12.08, and now it's hit 19.28 and trading at this particular moment at 17.97. Here we have the Trin gauge, what I call it. Actually, this is pure Richard Arms Trin index. My reading of it has specific parameters. Now look at this. When you're looking at the oval formation in the Dow, that's a high-level consolidation. It essentially looks a lot like distribution. It looks like churning, sideways action. It was not, in fact, a rectangle. It was an oval. This one was a little different. I spent a little time last Friday, Friday a week ago, talking about the chance that this is what I call a Chapman Wave flat base restart. What exactly is a Chapman Wave flat base restart? Well, let's go to this particular chart here. I'm only going to do, because this chart is up, I want to just quickly explain the Chapman Wave methodology. You look for the lowest, most identifiable low bar. From there, you should get to at least 4 peaks higher. Once you get there, other things can happen. In this particular instance, you went to a peak T, and just 2 bars later, you went to 1530. You plummeted down to 1495. This is the E-minis. You ran up to 1524.50, plummeted down to 1481.75, and today you try to hold over the 9 EMA, and you didn't hold there. I'll talk about some of these other things and what I'm looking at in this particular market and why straight after we get back. And I'll look at Alcoa request from Mary.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
All right, folks, Basil Chapman, and this is the Tiger Technicians Hour. Dow's up 50, S&P's down 0.94. Number of questions. Let me go to these questions one at a time. Of course, I was right in the middle of something, but I've already moved the charts over. So, needless to say, I'm not going to remember what it was. So, here we go. Alcoa, first of all. Alcoa right now is trading at 8.39, down 3 cents. The question is, where would the base be? Is it going to, how low can it go? Now, their monthly chart is just horrible. I had this as a trade. It had a huge spike up the day day after we got it, or the day we got it. It went to a leg. I thought it could be a B/E. It went to 9.37 above the 933 high of early January. And then the next day, it just gave it back up. Thank goodness I had a really tight stops in, and we just, we took a tiny loss. But that wasn't the point. The point was, it was at a moment where the weekly chart would have improved so much. And that says to me that Alcoa is just not doing the right things. You've got to be really careful. If you are still in Alcoa, if you have been buying Alcoa, I'd be careful, because the low of importance was the low of 8.48 back on the 31st of December. And if it closes, and right now the low is 8.38 today, and it's at 8.41. The stochastic's trying to flatten out. The MACD is not very good. The 120-minute chart says Yeah, I'm trying for something, but I haven't found it yet. It's not nice. And it's a very flat stochastic. It says that if it was to rally, it could pop, but it's going to have to come back to build a base. Here's my recommendation. I would be very careful, at least a half of the position that you have, I would put a stop. And that stop would be under 1 penny under today's low of 8.38. It's at 8.41 right now. That's not a big deal. It's just 4 cents. But I would put it there. Why? Because even though we could turn around in the next 3 days and have a very nice spike and try to get to 8.72, the 9-period exponential moving average, if the market starts to weaken again and it isn't able to find any footing and it gets to 8.36, there isn't very much support all the way down to the 8.35 low of the 4th of December, then 8.32. So I would rather not risk being stuck in a position that's getting worse. I'd rather take my lumps, take something off. If you haven't had it for a while and you had a bit of a loss, I would get out. Now the big question is, hey, wait a minute, the monthly was almost about to look good. Well, what does all this mean? It means that Alcoa is making the pattern I call the H that goes to an M pattern, and that there's a really good chance if it doesn't find its feet soon, it's going to test the 7.97, 7.96 lows of the past 8 months, probably go underneath it, and then it can have a much better rally, and that rally has a chance to get back into the 860s or the 881 area if within, it's a weekly chart, within 1 week, it goes below 796, but it closed decisively above, or it doesn't even break and touch 796. But that's the way I'm looking at it. And the monthly chart says, whoa, you break 760, and Alcoa could be on its way to some real big problems. So that was just a great chance we had the other day where it had that one-day pop. It was a U-shaped pattern, but all it was doing was making what I call the drop bucket pattern in the Chapman wave methodology. These are all the things that we go through live. We go through in charts over and over and over again. And I do that with, this is chapter 22, using my CD introducing the Chapman wave methodology as really the foreground. See, there's that pattern, that double top pattern. And that's what you've got to be very careful. A number of charts did that yesterday. So please be careful. What you want to see is for the end of the day, Alcoa is up in the 847 area, or a little higher. I don't know if it can do that. And then by Thursday afternoon, it's trying to tackle the 8.90s, which is the 9-period exponential moving average. Next question was, and I just received it. I have a quick question concerning charting. I use Thinkorswim platform, and the 120-minute E-minis futures chart looks different from what you show in the den. Now, I don't usually show it's the E-minis. Okay, that's fine. The body of most candles looks different, which results in different peak and trough count. I do not understand why. Any information would be appreciated. Well, let me go through it. I was about to show you the Dow, which I don't often show. I don't actually trade the Dow, I trade the E-minis. And that made a beautiful peak and then pull back. I'm going to be talking about the chart formation in the E-minis. I'm talking about what times I'm looking at, and I'm also going to be talking about the USD JPY currency.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the market, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman, Tiger Technicians Hour, and a couple of things that are quite important. In the question that Jacek sent me about my charts that I post every morning, I post a chart of the E-minis, the daily and the 120, and I just do a real quick analysis. I don't give direction. I just explain what we're looking at and what the parameters are, because so many people are using the Chapman Wave. I like to try to make it as clear as possible. So the question is, first of all, I'm going to ask Jacek that you send me a chart to Basil Chapman at TFNN.com. Send me one of your charts if you can. I hope it's easy to do. Just send it over. I want to check it. But most important, have a look at my ESH13. That's what you were looking at. The low bar of the 21st of February at 1495.00 occurred at 4 o'clock. The very next bar was at 17:15, so that's 5:15. There's a break, and that's the break that that includes the break. So I have a shorter time span for that bar, and yet for some reason I've never found that it's been a problem in my work. I don't know why it should be. Believe me, if I was a programmer, I would never use that because it's uneven. It's like Hopalong Cassidy. I mean, you're not getting an even pace. So I cannot explain it. Thank goodness I'm a visual artist. Of course, I like the mathematics, but I like the visual artist, and that's what I get. So my first peak starts on the 22nd of February at 000 at midnight, and at 1506.75 I get the first pullback to make a peak, and immediately later it starts leg B, and that leg B has a higher of 1507.00, then it goes 1507.50, and then it goes to 1509.50. That's peak B because it's a slightly lower high bar, the next bar. So those are floating letters, and it becomes a peak when there is a peak. So the big question will be, there it is right there. So noon yesterday, 12 o'clock, no, that's 10 a.m., and then plop, it drops. Yeah, so there it is. So I hope that answers the question, that it depends on where your program starts. It's the bars themselves. Some people tell me that they start the bar after the break. I cannot, that's the only way I can answer it. But send me your chart and I'll try to scan it. I'll try to look at it carefully to see where we differ. But you should still get to a D. I might get to an E and you should get to a D. We should still get it. That's the way this works. I don't know why. I hope that's the answer. Now the next question, then there was a question about the the US dollar Japanese yen currency pair on the Forex. It's trading at 91.359 right now, down 45 cents. There's a bar. I got a peak after. I got a left side, right side price time match. And this is the very person who asked me about that. Let me talk about it. On the 17th of February at 2300, there was a high of 94.208, and it was peak B. It had held the 200-period moving average bounce. There was a long period, and then within it there was a peak, ABCD, from the doji low of the 21st of February at 1300. And then it makes quick A, B, C, D, E. And instead of having the quick pullback that very often happens, it held the 9-period exponential moving average, and it spiked, like the other charts, it spiked up at 7 a.m. on the 24th to 94.446. There was a left side, right side price time match, and I chose in this particular instance, there was a particular candle that I thought was very important, and that was the doji candle at 11 o'clock on the 20th of February. And it turns out that was 2 bars before it broke to the new high. That gap was then filled and it plummeted. The question, 2 questions. There's a candle I've developed which is called the Chapman Wave Roman candle. The reason why it's called the Roman candle is, you know what happens with the Roman candle? You light it and then it just blows up, right? Well, this is what happens to this Roman candle. It opens at a certain level. This is the candle of the 25th of February at time was very interesting, 16:59 instead of 17. That's interesting. All right, I'm arguing that's the bar. This is a 120-minute chart I forgot to add. So it opens at 92.611. The high is 92.611. In this particular candle, sometimes what you'd be looking at is just a fractional new high. The little wick at the top is what you light the candle with, right? Sometimes it's there, sometimes it's not. Doesn't matter. The most important thing is that the pattern it forms, and in this particular case, it certainly did that. The pattern that it formed is where it opens, makes a fractional new high. It doesn't always have to, but it makes a fractional new high bar of the bar. Then it plummets, and believe me, this is a plummet. Opens at 92.611. It slumps down to 90.857. And then it closes halfway or slightly above halfway of the entire candle. Now, what does that say? The Chapman Wave methodology, this particular candle, implies that if at any point you get into about halfway of the wick, in this case it would be 91.388, there's just a really good chance not only are you going to fill the candle, go to the low of 90.857, you will break that low. And that's what I'm anticipating for the USD JPY on a short-term basis. Wait a minute, that's not all. Most importantly, if you're looking at the stalk leg formation, it made the second body just recently in February. Then it spiked yesterday to a new high. That's the neck and the neck and the head all in one shot. Goes to 94.446, plummets down, and it goes way below the body. So that says, okay, together with the Roman candle that I was talking about, what would we be looking at? Well, we're looking at the candle, the doji candle of the 29th of January, the entire day of 91.007. Ooh, 007. And now, instead of Jaws music, we can get Al to put in James Bond music. And we've got 90.320 as the low. So my target is 90, is the low 90s, number one. The MACD and stochastic aren't showing any sign yet of strength. And the 120-minute chart did show a sign of strength, but got repelled at the 9-period moving average, so it's going lower. Here comes the big thing. The monthly chart is amazing if you look at it in the shorter term meaning over the last 2 years. If you're looking at it in the longer term, it's just a little bounce, an arch formation. But wait a minute. The arch formation says that at any point in the next 2 months, if the USD JPY takes out 94.771, that's on a monthly basis, closes above it, all of a sudden 100 to 103, the 200-period exponential moving average, becomes on the horizon. It becomes a focal point. That's just number one. It doesn't say it's going there, but the fact that the stochastic's at 88% and the MACD is very good says that would be the target looking out if the weekly chart can hold on a close 2 out of the next 4 weeks above the 9-period moving average, no matter how much it goes under it, of 90.773. So what am I looking for? I'm looking for further downward move in the USD JPY. What am I looking at? I'm looking at a chance of getting to 90.10 to about 89. Oh, I would say 89 50s, even the 80, even the low 89s is possible. I don't think this move is going to take it to 86, the 200-period moving average in the weekly. And not only that, in the methodology that I'll be teaching on March the 8th about the Chapman Wave Cup and Ladle, I'm spending a lot of time on this particular pattern. Chapman Wave Cup and Ladle says if you take out the left side lip, in this case 84.173, decisively, you should go to leg D. Where did it go to? It went to peak D at 94.450 the week of the 15th of February. And the last bounce just missed it, 94.446. So there's a little bit of a double top there that you got in the daily. That says, yes, be careful. USD JPY is coming down. And the candle I'm really looking at is the candle of the 25th, or the week of the 25th of January. That candle had a high of 91.188 and a low of 88.051. How it gets into the wick of that is going to be very important. It turns out that it's a Roman candle, but in a very different way. So I hope I've answered that question. What would completely demean the weakness and say, hey, you think you're going down? I'm going down. I'm going to be running up. Is a rectangle formation. I'm not sure it's going to work out. I'll draw it in here, and that's a rectangle formation that forms within the context of the candles of the last 2 days. 94.446 high. And the low of yesterday, which was 90.857. Let's go to our first caller. We've got Rich in Orlando. Hi, Rich. How are you?
I'm doing well, Basil, and yourself?
Very well, thank you.
Great. Yeah, the financials. I mean, they've been on a tear, and looks like they may be breaking down here. I'm not sure. The FAZ is what I'm interested in.
Okay, if you don't mind, let me just look at the XLF, which is the root. Do you mind?
Sure. No, please do.
Okay, the XLF, folks, is the S&P Select Financial Spider Fund. It's trading at $17.19. It just made a high recently of 17.94 and a peak D. Remember in the Chapman Wave, we talk about the buy signal should go to a buy mode and should take you to at least a peak D. Well, this did that once. It actually squeaked within 2 days to an E at 17.50. The low that we're talking about was the low of 16.11 on the 31st of December. it made, I had this in and I took it out because it was looking a bit messy, but it made that oval formation that I call the body of the stalked leg. And that was right there if you're looking at Tiger TV. And then, now this is very important, what happens is it made a neck which turns out to be A, B, C, all the way to a D, another D. But look at this. This is so important. One of the reasons why I wanted to go short, we did go short in my opening call on one of the indexes, is because of this particular pattern that said the stochastic was weaker at this rally than it had been on the other rallies at this particular high. The MACD deflected lower. That's a big negative. And it said that this peak D could see price and time, especially when it made that spike yesterday to an A minus. It's what I call a right shoulder failure. And right shoulder failure, let me just quickly go there. A right shoulder failure, my CD introducing the Chapman wave methodology, is right here. And what does it look like? It looks like this, where you've had usually a peak D, E, or F, and you come down sharply, and then there's a rally that fails, and that rally that fails says you can make the pattern that I call the dreaded H. In this case, it was so quick, it was a dreaded H based on the 120-minute chart. Whoops, I haven't notated it, so let's skip that for the moment. And it gave me a gap. It gave me, I'd already drawn in the base of support for the XLF, based on the candle of the 23rd of January of 17.21 was the low. Here's where it gets interesting. The weekly is only just like the IWM and the what was I looking at just a moment ago? I go through so many of these charts. Let me just double check. I was looking at the USD JPY. Just as the weekly charts have just this moment given the sign that there's weakness in the weekly charts, even though the technicals are still very strong. So how Friday closes is going to be very, very important. So what we're looking at here in the IWM made a peak F top. The XLF, IWM is the Russell 2000, made a peak D. So they're all in concert, and that's really important in my work. So the dailies are vulnerable, and my suspicion is the big test is going to be at 17.03, excuse me, the low of the candle of the 18th of January. If the XLF closes decisively under it, and this is so fascinating, you are along the FAZ?
The FAZ is the short play. I own that. Yeah.
You own it. You are long the short play, in other words.
No, I'm looking for it to come down. I'm playing the short side. The FAS is the bullish one. The FAZ would be the short play.
Right, but my point is that in the FAZ, you have bought it, right?
Correct.
Yeah, that means you are long a short position. ETF.
Correct.
That's all. I just want to clarify for our listeners.
No. I appreciate you doing that. Yes. Okay.
So Bank of America says that it could very well test the doji low of the weekly chart at 10.46 is the low, and it's at 1107. WFC, which is Wells Fargo, made a peak E top in the daily, and actually turns out to be a potential peak E in the weekly. This is a weaker chart than some of the others, based on the weekly chart so far, and that says it's going to fill the gap, and the big thing about that would be 33.71. Let me go through a couple of these during the break, and then I can give you some clearer idea, and then I'll also put up the FAZ. Do you mind holding?
No, I'll be happy to hold. Thank you.
Great. Richard from Atlanta.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, the Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by Backtech Environmental. For more information, just click the Backtech banner on the front page of TFNN.com.
Hi, folks. Basil Chapman, and I just jumped. I got a couple of emails. Thank you so much for that 120-minute charge, Jacek. I will look at it. I'll study it. I'll see what's going. Yes, I see you got to a C, and I have the D. I just missed it by 25 cents. I got to find out where that is, and then I got and Warren says voting for black background charts. You know, the more I do this, the more I miss my black background charts. Look how clear the stochastic and MACD is. All right, so this is the story in the XLF. I haven't finished notating the black background charts on this particular one because I went to the white charts, but it doesn't matter. Let's just look at it as a chart formation. What it is saying is, in the decline that's unfolding right now, the distance between the fast-moving average, the yellow line, and the red line in the MACD, that's the top indicated right here, and the stochastic pulling back sharply at 33%. My suspicion is that when this is over, the stochastic will have gone down underneath 20%. So I'm going to give you a projection right now that says that the XLF is pretty much, I'm pretty sure it's going to test, it's at 1722, 1695, but the gap underneath 1674 to the gap high of 1641, I don't know if it's going to fill it, but I suspect that we are looking at a price point of 16.70-ish as a downside target, and that's going to be the big test to see whether or not it holds. If it breaks that, it can come all the way back to the 200-period exponential moving average. But my guess right now is that we have to go one step at a time because it wasn't even able to rally today. So your FAZ is in leg C up in the daily chart, and that says to me that the target I'd be looking for is the candle right there. The candle of the 18th of 13.30 is the high. So I wouldn't be surprised if this goes to a C and then a D, and the 50-period exponential moving average at 1332 corresponds to the high of that bar of 1330 of the 18th. So that would be the target. The 9-period exponential moving average of 12.07 to 12.20, that's going to be a test if there's a bit of a pullback. If the FAZ breaks underneath $12, I say, whoa, we could have used up a chunk of price and now we've got time on our hands. So that's what I'd be careful of. But right now you're in a great position. Stay in that position. I'm looking for higher prices in FAZ. I'm just saying it might have to test 12.20, even 12.08. Underneath that, I'd be a little bit careful. I hope that helps you, Rich.
So you're saying that the first price projection would maybe be 12.20-ish, or in that area there?
The support of the FAZ is the low of today of 12.24. Between 12.24 and 12.08 should be very good support. Stochastic hasn't gone to 80%; it's at 60%. So that's what I'm saying right now.
Okay, and an ultimate price projection? Did you
ultimate? I don't have an ultimate, but I have my price projection. If the FAZ is able to get to 12.80, my price projection is 13.10 to 13.20 or 13.30.
Super. Listen, thank you so much, Basil. Have a good day.
Thank you very much. We just have time to go to David in Denver, Westminster. Hi, David. How are you?
Yeah, hello, Basil. How are you?
I'm very well. We've got a moment, and I'd like to... You got a question on the
SLV?
Okay, the SLV. I'll go to the white chart. I've done that. SLV is acting very well today. It stopped at the 200 period. Are you long?
I am.
Okay, this is what you want to see. You want to see it's at 28.37. It must hold 27.96 to 27.86. My projection on this is a test of the high of 29.14, the test of the 15th. Hope that helps you. I'll be back with Tom's show. You can call me this afternoon. We can go through it again.
Okay, thank you.
Thank you for calling. Folks, stay tuned. We've got Victor Jones coming up. Fabulous, great show on options. And